Welcome to Stock Talk. This is your host, Scott. Hope you've had a good month or so of trading for March. It's been some crazy stuff going on the last couple of weeks with the banks. All kinds of things going on there. We'll talk about that a little bit. Had a pretty good few weeks here. Actually, staying above water, so that's good, and that's what we want to do this year. After last year, and so we're doing pretty good start of the year for the first 3 months. This particular week, I think we were pretty close to flat, maybe a little bit in the green. But we're going to talk about all that. We're going to take a look at the portfolio. As far as the banks go, there's been a lot going on there. With I think 3 or 4 banks failed. One of them being Silicon Valley out in California there. One of the main things going on there, I think, was some venture capital folks needing their monies. They had a really heavy deposits on some of those big customers. I think it was only like 7% were FDIC type customers. But as far as the banks go, the bottom line is the Fed stepped in. And the Fed stepped in and the bank stepped in, and they're going to cover these depositors. Now, as far as bank stocks go, now they're not necessarily going to cover anything like that. But the depositors are the ones that's being taken care of, and even the ones that were above the FDIC. And so it looks like a bailout to me. And of course they say that doesn't affect us taxpayers, but in the long run, fees go up in the banks, and they get their money some way or another. So don't think it doesn't come back to us, because it does. And so there was big fear that this was going to be a contagion, where this was just going to be like a domino effect, and we're going to see a bunch of bank failures. Bitcoin got a pretty good charge out of it. Yesterday, the Fed did raise 0.25 points, and market took it well to start with, and then Powell got on there and started talking about some things. And what happened was Powell was pretty much saying we're going to take care of the banks, and then you got Janet Yellen at the same time speaking in front of Congress, and she's saying things like, well, we're not sure that all banks are going to be taken care of. So there was a little mixed signal yesterday, and today they got their act together and got their story straight. So the market kind of settled down. But anyway, that's the bottom line is the Fed's going to do what the Fed's going to do. And this market has everything to do with the Fed. Now, what I've been seeing too is that this is probably going to be the last raise for a while, even though it hasn't been said. What we're seeing there, as far as some of these rates that are going down without the Fed. So as far as the interest on the Treasury bills go, and that's part of what caused the problem with the banks, is because they were these customers holding all these Treasury bills. The bank was putting it all in Treasury bills, and then next thing you know, you got to run on the bank, and they got to sell for a loss. So and the reason you get a run on the bank is because of the way the market's gone, and people need their cash, and so especially these high-tech companies and things like that. These companies that are been funded by venture capitalists, and also if you've got a lot of crypto type companies, and they crypto's down, so they've made a run towards the bank as well. So when you got a bunch of depositors and large depositors coming to you, then that causes trouble with the banks. And so that's kind of what happened there, as I understand it. So is it going to continue? I think there's still going to be some of that lingering on, and so don't be surprised if you don't see some headlines around that as well. That's really does stand good for Bitcoin, but there's a lot going on with Bitcoin, cryptos in general. As far as regulatory stuff goes, there's big battles between Coinbase and the SEC as far as that goes, and so lots of news, and that's what drives this market right now. So we're gonna go over our portfolio. try to focus on that. And that's the best thing to do is just kind of keep an eye on your stocks and just kind of try to stay focused. So let's go there. All right, so here's our portfolio. You can see here we've got a red day today, pretty much. Even though the market was green, just towards the end of the day, you see how they came up towards the end of the day and recovered. The market has really held up pretty good, if you ask me, especially towards the end of the days. It seems like we've had a good run, and so let's just go ahead and take a look. Now, what I've done the last couple months, or the last couple of weeks, I'm sorry, last couple of weeks, is I've been trading in and out of QQQ and MSTR. We've made a couple of trades on both of those. Both of those trades were pretty good trades, made 6% in a few couple of weeks or so. So we cashed in yesterday, or yesterday when the market dropped, I bought into some MSTR, and I think I also added a little bit of Tesla to one of my accounts as well. So those are the things I've been buying: MSTR, QQQ, and Tesla. Not holding any QQQ right now, holding some MSTR. We'll get see if we can get back to even on that and make a little money on that, and then we're down on it about 3% right now. All right, so let's pull that up. Let's take a look at that. You can see here we bought some. Let's go ahead and pull that. Let's pull the 1 month chart up on that, and you can see it had gotten all the way down here to like 189, and then you can see now where it's at 256. Quite the run. I did buy some. I think it was right in this area here when it dipped the other day, and I did sell that pretty quick. And then I bought back in. I sold it pretty quick because it bounced right here. But I bought yesterday, before everything crashed, somewhere around this area, and so I'm down on it just probably about 3% right now. But 5-day chart. Let's take a look at the 5-day chart on MSTR. Now, MSTR, if you don't know, is MicroStrategies. They do hold a lot of Bitcoin as their cash reserves. That's what Michael Saylor does. He buys the Bitcoin with any cash that this company has. So for the 5-day return on this one right now, it's down actually about 4%. And if you go to the month chart for this one here, it's flat. I mean, we're talking about 0.34%. And so, but you can see there's a lot of ups and downs. Sometimes it moves pretty quick. And so if you can catch a good dip on this one, this is a good one to buy. Now, I got into it a little bit too early yesterday. I wish I'd waited a little bit longer, but I did buy a couple of lots. So I bought, and then as it went down, I bought some more. And then it really went down. Wished I could have got some more at that point, but I didn't want to try to catch a falling knife, so I'm always careful about that. But we're about 3% down. We'll wait for that one to come back, and that's the one we'll look for about 6% gain on it. If we can get 6%, we'll take our money. QQQ. Let's go ahead and take a look at that. That, of course, is our ETF that pretty much follows the NASDAQ. And let's take a look at that 5-day chart here. Pulling up the QQQ on my phone here, kind of gives us percentages. So 5-day chart it's up for the week, for the past 5 days, 1.81%. So that's a pretty good little gain for the week. We'll take that. And if you go out to the month, you're actually looking at a 6.5% gain for the month. So this is a good one to if you want to play the market. If you think the market's going up from here, especially the NASDAQ, then your 1 month chart here, you're looking at 6.52. 6.52. Just for grins, let's see what we look like for the 6 month period. You're up 12.84% in the 6 months. So you can see this market's turned. This market's turned, and a year to date on this one is actually at 16.75%. So the NASDAQ is up year to date around 16%, 16.75%. So, I mean, we've been buying this one and selling it, and that's why we do it, because I think the market's turned. Now, is it going to go much higher? Who knows? We're gonna hope it does, because we're going to keep buying the dips on this when we can. So watch for that. All right, so GBTC. This is our Grayscale Bitcoin Trust. This is a good way to buy Bitcoin if you do not, have a way to buy it in your IRA. This is a good way to do it. So let's take a look at some of the percentages on this one. For a 5-day period, this was actually up 3.69%. So that's pretty good. 1 month period, we're looking at about 39%. As you can see, that's a nice little chart. Very good gain for 1 month. And then year to date, we're showing a 93% gain. Okay, so if you would have bought this January 1st, you'd been getting around $8 and something probably, and you would be sitting pretty. But we bought this one earlier last year, so we are up on it, but not 93%. But we are up on it. But we're going to hang on to this because we think that Bitcoin's going higher. This is I think the crypto winter's over with, I believe, and I think Bitcoin's going to go higher. Maybe get back to those all-time highs of 60 something thousand. So which this one, if you go to let's go out 5 years and look at the maxes here, you can see this was $50 at one time. All right, so that's a long ways to go from 16, and so we're going to hold on to it. We've got a pretty good bit of shares of these, so we're just going to hold on to it. All right, so let's see what we got next. Next, we've got our ETH, and this is also Grayscale Ethereum Trust, kind of like the Bitcoin Trust. And so for the 5-day period on this one, we are looking at it's actually down a little bit, 1.45%. If you go to the month chart on this one, you're seeing a 13.18% gain. So you'd be up 13%. If you go to year to date, you're up 71%. 71% year to date, and that's a pretty good gain. And we haven't had this one that long, so this is a pretty good little gain for us. We are we're holding it, I think, longer than the year to date. Though we did buy it early last year, so we are not. I'll take that back. We are not green on this one yet, but it's up 71% for the year. Okay, if you look at the 1 year though, just going to give you an idea, it's still down 68%. All right, so let's go to that max on this one. You can see this one got up to $45 at one time. So you got 32 and 27. So long way to go. If Ethereum gets back up to that, I think it was around $4,000 when it was probably up to here. And right now Ethereum's sitting, I'm not sure where it's at today, but I think it's running around 1,400 or something. We'll check that later. But long ways to go if Ethereum gets back to where it was at. So that's what we're kind of banking on there, that it will eventually. Amazon, that's a good company. I mean, we get packages coming to our door every day. So they're making money off of us for sure. So we're trying to make some money on their stock. Going to a 5-day chart here on Amazon is actually pretty flat. It's down 0.83, a little bit less than 1%. If you go to the 1 month chart on this one, you're looking at up 4.9%, and year to date, this one is up year to date 16.8%. So good little run, but it's got a ways to go too. These again we bought last year before they took the run. So we're still down on these, but expect it to come back. Let me go to the 5-year chart on this one. You can see where this thing was running at one time in the 170s. So that's a long ways to go if we can get back up to there. Okay. We may not. I mean, we may only get back to this area here, but that's still a good little gain from here. And so we've kind of moved into these last year after Novavax did us wrong. And so we kind of moved into Amazon, Google, Tesla, and just kind of put it in some solid companies that we know are going to be around for a long time. And that was a good move because I think we got out of Novavax around 49 somewhere. I can't remember exactly which one it was, but looked the other day and it was $5 and something. So good move there. All right, so 5-day chart on Alphabet here, Google. Let's see, the 5-day chart says 3.76%. So green for the week. If you go to the 1-month chart, you're looking at an 18.3% gain. So good, having a good month there. And year to date on this one is 19.5%. So you can see that these this first part of the year has been good, and so as long as it continues, that's going to be a good thing. And I don't really see a reason why it's not going to continue unless inflation rears its head again. Then it's because I think the Fed's done. I really think they're going to be done. I could be wrong, but Tesla's. Let's see what they did for this week. 5-day chart here. If you go to the 5-day chart, you can see they're up a little bit, 3.76%. That's good. And 1-month chart for Tesla, this is going to be a real good one, 18.30%. The year to date for Tesla ought to be pretty awesome, 19.5%. And so Tesla is actually if you go to 6-month chart, 6.79%. So they're doing pretty good. Still got a ways to go for the year. Still down 25% from a year ago. And you can see the Tesla chart here. It was 381. I think it actually was at 400 and something at one time. But 381 from 190 still got a long ways to go. And I think Tesla will get back to that point for sure. Maybe this year even. I watch a lot of videos on Tesla, and they're just an outstanding company. They're a lot more than a car company. They're a power company. They do all robots. They do their manufacturing's just unreal compared to others. It's just a great company, and they got a great leader. And just watch out. They're gonna go on a run here, I believe, before the year's over with. They've already had a good start. All right, CLSD, it's heading the wrong direction. It's back under $1 again. Once you get under that $1, you get into that danger zone of getting delisted. Got to do it like, I think it's 30 days or so. So we're not going to sweat it either way. We don't have a lot of money in this one. But 5-day chart, we're down 6.7%. 1-month chart, we're down 22%. And if you go year to date on this one, year to date, you're down 13%. So wrong direction all the way around on that one. And again, small position on that one. So we're not too worried about it. Now, Tilray has got a little green on it today. We'll take that. 5-day chart for Tilray. It's actually pretty flat, 0.38 for the 5-day. 1-month chart, you're down 7%. And if you go to the year to date, Year to date is at negative 2.60%. So these last three are just so beat down. We won't be doing anything with them. We'll just be hanging on to them. And maybe if we need cash for something, we might sell some of them. But I don't plan on doing anything with these while they're down this low, because we've got a good number of shares, but it wouldn't do us any good to sell at these levels, because they're just beat up big time. Nicholas just had a terrible week. Let's take a look at what it was for 5 day. Just a slow bleed. I mean, it's just a slow bleed, down 11.7%. You go to the 1 month chart, it's going to be even uglier, 32%, 32.5 almost. Go to year to date on this one. Year to date is 30.5%. So ugly, ugly, ugly. I mean, there's not much more you can say about that. So that's where we're at. That's where we're at for the month. Going to close out this month with that. We got a few more days, another week or so. But I wanted to go ahead and get on here while we had a little time and just kind of discuss what's been happening. All I'm doing is just hanging on to what I've got. It's just and doing a couple little trades on the dip, because the market has been really good to dip and then come right back to where it's at. And crypto's done the same. Bitcoin got up to 28 something the other day, went right back down to 26 something I think it was, then came right back to 28 something the next day. So those kind of days, and when the markets do that, it's a good day to trade whenever you get those dips, because now I think it's, last year you couldn't buy the dip because it just kept on going. But we're getting into right now, so far the first 3 months of the year, you could buy these dips. Or you could have bought it the first of the year and just held on to what you got, and most of it you can see is green for the year-to-date stuff, and really green, the ones we're holding. And so that's good for us, because we needed to make a comeback this year after last year's beating. And that's just the way it goes sometimes. We had a little bit off year before that, and a couple of great years before that, and then the last year was terrible. And so that's the way it goes. And so we're clawing our way back, and it's going to be a long claw. I think. I mean, it would take a tremendous year to get back what we're down from last year, but that's the way it goes. And so the main thing is you just got to hang in there. It's what they say. It's not trying to time the market, but time in the market. So, and that's what I try to do, is try to keep that money at work, keeping enough cash out to live off of as a retired person, and also being able to keep some dry powder to buy these dips when they go down. And so I'm feeling more comfortable this year as far as buying the dips, but that could all change tomorrow. I mean, you never know. You never know. That's the way the markets work. So I hope you have a great rest of your month in trading. We'll get back on here maybe sometime next month and see where we're at then. All right. Thanks. Bye.